over here you have an abundance of confluence factors just aligning up, and this is something that the smart money is also looking at. Your entry is going to be somewhere along the lines of here. What's good, guys? New week, new market update. Let's get into it. So Bitcoin, it turns out that this was the liquidity sweep that we were looking for. I was expecting somewhere around 91,000 or maybe 89,000, where these would be just super high probability entries, but it's not to sleep on this range deviation over here, because just like how we drew out the value area last week, the value area is over here, and a sweep beneath the value area plus wiping out 1, 2, 3 points of liquidity means that this is very much valid. And the fact that you failed to break below the value area, accepted back into it, and well, you didn't really find support, but the fact that you deviated below the value area, accepted back into it, and now oscillated all the way towards the opposite side of the value area is a really bullish sign for Bitcoin. Now, there are only two possible scenarios that can happen here. One is, as you can see, Bitcoin has already started breaking out of the value area. So two things that can happen here. Successful breakout, you find this as a support and off you go. And second scenario would be that you fail to break out during the first try, you come back down, maybe swipe out some liquidity, find some support at the point of control before attempting the breakout a second time, and boom, that is going to be the magic recipe. And in terms of which scenario is more likely to happen, honestly, it's a bit hard to determine right now, because a core tenet of being a good trader is the ability to think in terms of probabilities and scenarios, instead of saying like, hey, price is going to do this. More of like, if price does this, then how will I react? And if price does that, then how will I react? And in this case, I'm going to try to map out the multiple scenarios for you. So taking a look at quarterly theory just on the week itself, you can see that we have just started the year, and at least until the 12th of January, we're still very much within the accumulation period. Now, this is, by the way, following this was your manipulation, distribution, and ultimately reversal pattern from last month. And so this month, currently, it's looking like the first week is going to start out as an accumulation, where the second week, very likely you're going to have some sort of manipulation, ideally towards the downside, because when your manipulation is towards the upside, usually distribution ends up going the other way around. Of course, this is not a hard and fast rule, this is more of a rule of thumb. But ideally, you want to get some kind of accumulation forming some kind of a range between right here, right now at 100K to about $96,000 or $95,000, because this represents the midpoint of the value area plus the point of control on the 4-hourly chart, at least looking back at the last 500 candles of the 4-hourly chart. Now, what this tells you is that this is the area where the most traders, historically speaking, throughout this entire range on Bitcoin from starting 22nd of November until now, the 6th of January, this is the exact level where most traders believe that this is fair value for Bitcoin, which means that if there are going to be a really strong group of buyers stepping in to buy Bitcoin and support this level, it's going to be around here. Just so happens that this also lines up with the 4-hourly EMA, as well as a couple of liquidity points over here. Now, the reason why I bring up liquidity points is because sell-side liquidity sweeps during an overall uptrend, sell-side liquidity meaning swing lows, and uptrend meaning, well, just look at the trend overall, it's very clearly in an uptrend. Sell-side liquidity sweeps in an uptrend presents a setup that is so high probability during a bull run that it should be considered a cheat code, which is counterparty liquidity sweeps during a trend leads to the most volatile moves, or like the most volatile expansions within your trend. Now, in layman's terms, or like in simple terms, I know that was quite a mouthful, is that whenever you see swing lows in an uptrend, use them as an opportunity that when the market does take out this low, just understand the psychology behind this. A lot of traders that maybe went long anywhere around here would place their stop loss underneath here, as well as traders looking for, some kind of a breakdown. Oh, support got broken, they're gonna, short the breakdown. And so they're gonna be entering around this level as well. And third is that anyone in profit going long from any point here would ideally move or like trail their stop loss as price goes higher. And usually when you trail a stop loss, you use previous swing lows if you're long. And so all of this combines essentially to just say that underneath these swing lows are a very high concentration of traders that will either get stopped out or be put in a very unfavorable position if price were to head towards there. And that is where your opportunity lies as someone who trades alongside the smart money. Instead of following alongside retail and, quote unquote, shorting the breakdown, knowing full well that, right now the uptrend is still very much intact, we're going to use this opportunity when everyone gets stopped out. That's where we enter. This level right here at 96,000 lines up with a previous sell side liquidity as well. And so I think that at least just a possible scenario that I have in mind is that the first week is not going to be amazing for trading, just because this is your accumulation week. Usually manipulation / distribution are the best periods for trading, because well, if you know where the manipulation happens, let's say manipulation happens by taking out all of the sell side liquidity over here, then it's going to be a pretty surefire bet that distribution is going to be towards the upside. And especially the case if, let's say, you were to end accumulation all the way back down at 92,000. I do not think that's likely. And then the moment you go into manipulation week, boom, right? You sweep underneath this level. That's definitely manipulation. This distribution cycle is going to be absolutely gorgeous. So just to answer the question of like which scenario is more possible at the moment, it's a very roundabout way of saying that I'm not too sure at the moment. But the two entries that you definitely want to look at is drawing a box here. This is kind of like a new demand zone being formed, especially if we go onto the 1 hourly chart. You can see that there's an uptick in volume between these two areas. In fact, if you go into the 15-minute chart, this is going to be even more clear, right? Just drawing out the value area like this means that in the event that price fails this breakout, this is going to be your first zone of support. Now, this point of control is not the point of control that we were looking at before on the 4 hourly chart. This is on the 15-minute. Just understand that whatever happens, like whatever shows up on the higher time frames, usually has more weight because, well, they just simply take longer to form. So at least within the immediate short term, this is going to be a first area of support essentially. Now, why do I say that this is support? Because over here, I'm trying to educate you guys rather than just give you, the fish. So the reason why this is support is that because price spent some time consolidating in a tight range within this area, it also means traders, both sellers and buyers, have some sort of an agreement that, hey, this is not too bad of a place to either buy or sell. And so when price shoots out of this area really aggressively, what happens is that a lot of traders that have not yet had their orders filled, well, they're still going to have their open orders, and price shot out so fast that they don't really have time to fill all of those orders. So that the moment price returns back to this area, boom, guess what? All the open orders are filled and boom, price shoots out of the area. It's what we see happen just throughout every single market condition. Now, of course, that is just a first level of potential support, because what could end up happening also is that this is the manipulation. Price accepts back into the value area, in which case it's going to deviate all the way down to the value area low. So it's going to come all the way to 97.5. So currently this is going to be an aggressive entry for those of you who want to take a bet that, price is going to hold. This is going to be the breakout. Then this is going to be the entry that you look at. So stop underneath these lows, and your target is going to be the previous all-time high / higher. In this case, I'm actually going to target 115 for this leg upwards. Why? Well, let's draw a fib from the most recent low to the high, and negative 0.5 extension in this case would actually be at 116.8, but this 114 level is actually coming from even further back. So just to draw this out, coming from the consolidation of last year, you can see that the negative 1.618 extension lines up with the 114 area. And if we draw one more fib, just to gain as much confluence as possible, you can see that most of the stars will align to the area between 113 and 116, 117 being a potential price discovery zone where you can take your first profit, especially if you are trading like what we're discussing in this video. And of course, I'm going to share with you what I think the altcoins are going to do as well. But for now, let's go back to Bitcoin and point out the second entry, which I think is going to be much higher in terms of probability as well as strength. So over here, you have an abundance of confluence factors just lining up. When I say confluence factors, I'm going to draw a fib from this low to this high. You can see that this fair value gap right here lines up right underneath the 0.5 within this trading range. Now, why is this important? Within any given trading range, by the way, could be anything. Could be from here to here, could be from here to here. It could also be from here to here, from here to here, right? All of this is a trading range. And at any given moment, price is always in some kind of range. It's just up to you to determine what that range is. And within any trading range, you always have anything that is above the 0.5, which is known as a premium, and anything below the 0.5, which is known as a discount. Now, ideally, if you're a buyer, you want to be buying at discount prices. Ideally, you don't want to be paying a premium for whatever it is that you're buying. And this is something that the smart money is also looking at. So ideally, they would want to accumulate as much of their entries around this zone as possible. And so when we start filtering out for, liquidity levels or, fair value gaps or order blocks or whatever, I always see that beginners struggle with filtering out the good signals with the bad signals. And if you're a buyer, ideally look for these PD arrays within a discount zone. And if you're a seller, try to look for these at around premium levels. So you can argue that within this range, if you want to go short, then, this area here would be a good place to do it. Of course, do not just use this by itself. Always, at any given moment, whatever strategy it is that you're using, it's your job as a trader to find the highest probability entry. And the way that you're going to do that is by stacking multiple confluences on top of each other rather than just using, one theory, one reason, and just going all in on that. That's usually not the best move. The fact that you have a fair value gap over here, liquidity point over here, which let me mark out as a liquidity so that we don't get confused, means, as well as the point of control, the 4-hourly chart, means that in the event that you sweep this liquidity, you're going to deviate a little bit below the point of control, find support at this fair value gap, and that's probably going to be a much better entry compared to this one right here, where it's a bit more of a hit or miss, and it's a bit more of an aggressive entry. So in this case, your entry is going to be somewhere along the lines of here. You're going to place your stop loss underneath the value area, and your target is of course going to be, further up. This is going to be a much safer entry, but also I think, at least by stacking the confluences, I can only guess that the probabilities that this is a stronger entry, again, I don't want to say for certain, but logically, it's safe to assume that this is the higher probability entry. Now, of course, if you're trading on the lower timeframes, feel free to refine this. For example, like once price hits this area here, go onto the 15-minute chart, look for some kind of a break of structure towards the upside. And instead of setting your stop loss all the way down here, you could have an entry here, a stop loss here, and your target there. Quite literally triple to quadruple the amount of risk to reward that you take home at the end of the day. Now, if you don't understand what I quite just said there, then you should probably not do that and just stick to this 4-hourly entry. Even though it's not going to give you as big of a risk to reward, it's much safer and it's consistent. But if you do understand what I just said, it means that you have some experience trading, and that's going to make much more sense for you. By the way, guys, in about 10 days, I'm going to be hosting this free masterclass. Now, don't worry, this is not going to be some free webinar where I spend half the time selling you something. It's truly just an opportunity for me to go really in depth on setting you up for 2025. Essentially, I'm going to give you my top picks for 2025 in terms of the best coins. I'm going to give you my exact entry models and exit signals that I'm looking for to determine when the bull run top is in so that you can take your profit and get out. And most importantly, I'm going to be teaching you the lessons that I've had to learn the hard way during a bull run so that you don't make the same mistakes. And you will get all of this value for absolutely free just for spending 1 or 2 hours with me. If this sounds relevant to you, sign up in the link in the description box below. The last time we held one of these masterclasses, we quite literally went over capacity and had to upgrade our Zoom subscription like midway through the masterclass. So we're going to cap it at 500 people this time around. Currently, this is the number of people that have already signed up, so don't be too late on this. And by the way, if you happen to be one of the first 500 people to sign up, there's going to be a little very valuable bonus waiting for you in your email. So sign up in the description box below, and let's get into Bitcoin dominance just for a moment, because ultimately the majority of the gains we're going to make is not going to be through Bitcoin, it's going to be through the altcoins. And just taking a look at this, boom, this is a resistance area that price has failed to break above. Currently, it's looking like Bitcoin dominance is about to start trending lower. And of course, the moment that we start getting confirmation of that is after we break this low over here on the weekly or on the daily chart. Of course, that is still representing about, currently it's at 57.1 and that's at 54.6. By the time price does get there, rather by the time the dominance does get there, chances are a lot of altcoins would have already pumped. But here's the good news. I do think that with this fill, amongst all the other factors that we've discussed, even looking at Ethereum, Bitcoin, I think that price is going to start trending upwards for most altcoins soon. Just a few days ago, I've made a video breaking down my exact step-by-step process on how to get into these coins, because they're all giving very similar setups at the moment. And if you want to catch a move just like Solana breaking out of this range, guys, go watch that video. It's going to take you 15 minutes to watch that video, but it's probably going to make you a few $1,000s. Good ROI if you ask me. Anyways, guys, hope you enjoyed this market update. I'll see you in the next one. Ciao, ciao.